if there's enough demand, people will make pooled models. The pooled models become much harder to police. It's like the cat and mouse game keeps going on. So like I think that's where it's extremely different than Web 2, and that's also something where it's like purely the on-chain stuff will dominate the centralized. Because the centralized things will look like Uber and they can shut you down, right? They can just turn off that market.
Not a dividend.
It's a tale of two Kwan.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
Pollock.eth is the ultimate concept.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together to give the industry insider's perspective on the crypto topics of the day. So quick intros. First, you got Tom, the DeFi maven and master of memes.
GM, everyone.
Next, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
Today, we've got a special guest, Julian, the architect at Aevo, formerly Ribbon Finance.
Yo, I guess I'm Robert's stand-in today.
You are
Yes.
you are our DeFi. You are a DeFi maven today, or I guess not. No, the crypto connoisseur today. And then I'm Haseeb, the hype man at Dragonfly. So we're
also very
sick.
sick.
Crypto.
We have a very sick,
slightly
host
sick,
today.
slightly sick. Not that sick, but my voice makes it sound sicker than I actually am. I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So, Julian, welcome to the show. We should caveat that I think everybody here is an investor into you or into Ribbon Finance, I should say. We wanted to get you on. Because there's a lot of topics today that are kind of circulating in the crypto world that we thought you'd be the perfect guest to talk about, and we also want to get some time to talk about what you're doing with Ribbon Finance and Aevo, because I think it's at the center of a lot of conversations that people are having right now about where DeFi is going and where crypto is going generally.
Yeah, sure.
But the big news this week that you just explained to me that you've been totally on top of is Jupiter. So for those people who don't know, I'll give the very brief background. So Jupiter is a DEX aggregator on Solana. So a DEX aggregator is essentially, you can think of it like a Priceline for DEXs. So essentially it looks across all different DEXs and tries to find the best price, best execution, and it does fancy routing in order to give you the best possible price for whatever you want to buy. So 1inch is, in which we are investors, is the equivalent of this on Ethereum. Jupiter is essentially, they didn't take any VC backing, and people have been very excited about Jupiter because they were doing a point system.
They did technically take VC for one project, right? One of the coins did raise money. Yes.
Prior project, you mean?
Yeah, it was like it used to be like a curve on Solana, basically, last cycle.
Oh, I see. Was it Saber?
No. Saber was the twins or the brothers. Sorry.
Oh, the McCullough brothers. That's right. Okay, got it. So they were doing a separate. Okay, so they did something in the past that raised VC capital. Jupiter had no VC investors, so they had a very highly anticipated airdrop after their point system, and basically we saw the day of their airdrop huge amounts of activity. I think it crossed over $1 billion in daily volume. Several days leading up to the airdrop, which is very anticipated, they actually flipped Uniswap v4 for volume. And Solana on certain days actually superseded Ethereum, DeFi generally for volume. The airdrop finally took place on February 1st, and we saw huge amounts of capital. Some people, I think it was about, let me see here. They rewarded about 10% of the supply to about 1 million wallets that were active on the DEX aggregator before November 2nd. Today, the token is circulating about 60 cents, which would imply a fully diluted valuation of $6 billion, which would make them worth more than Uniswap on a fully diluted basis. However, there's a lot of controversy around exactly how the airdrop took place. So despite the fact that some people got $40,000 worth of Jupiter tokens on the airdrop, there's a lot of controversy about the way in which the team sold some of their tokens, or maybe sold some of their tokens during this airdrop. Julia, so I couldn't understand it because there's a lot of people flinging around accusations on Twitter, and it seems a little bit esoteric to me. Julian, can you walk us through like what the hell happened here, and how do you think about it personally?
Yeah, so I mean, this is what they call like an LBP on Ethereum. Basically, you can think of it as like a Uniswap v3 position, but it's one-sided. So they don't post USDC and JUP tokens. They just post JUP tokens. And the range they had the JUP tokens was between 35 cents and 70 cents, or 69 or something. And basically what this means is once the price crosses 69, the whole LP position would be fully in USDC. And it would be about 150 mil of USDC. So I think that was sort of expected. The team sort of mentioned that this gives users or traders the ability to sell back into the pool. It is sort of like good for traders and price discovery from their perspective. But I think what caused the uproar is a lot of users didn't read the fine print, which was the team's going to remove the LP position in 3 days. So they actually extended that to 7 days. But I think that sort of created all the drama where, people just actually realized yesterday that, if the price stays above 70 cents, the team's going to withdraw 150 mil of cash in a week. So I think that was sort of the main cause for drama.
And how do you feel about it? Do you feel like that's a fair criticism? Do you feel like, hey, they were transparent, they said this from day one?
I think they were pretty transparent, to be honest. I think, they sort of masked some of the terminology with new words that they came up with, like an open market auction and stuff like that, as people usually do. So maybe some people were somewhat confused, but I mean, I kind of understood it pretty early on. So I felt like they didn't actually change anything last minute, which I would consider wrong. In fact, they actually increased how long the LP position would be in the pool for, from 3 days to 7 days. So I mean, I think anyone who actually understands DeFi and read the fine print would have followed it. I think my main criticism is it's actually pretty hard to find this information because the founder just writes these blog posts on Twitter. So it's just these super long Twitter posts, and if you don't read them, you can't really find the information.
Yeah, I would say I agree with that description. I think they were actually in some ways extremely descriptive of this. And I think a lot of people who are complaining, were really just complaining because they were hoping that everything would have been written in the language that they understood immediately. And I feel like they didn't really read the fine print or they didn't get an airdrop, so they somehow were pissed in some weird way. But I feel like if you've watched, I mean, you have to be a little bit mentally insane to have watched all the content that Mr. Meow produced. I mean, that motherfucker was streaming 24/7 for the last, it's like watching a live stream for a week. But I think he did say everything multiple times. He just kind of said it in weird formats and But also, I think one thing that maybe I wouldn't have done, even though I know there was a reason they wanted to do this, was they launched all these meme coins beforehand that confused people even more. But I don't want to confuse our listeners with that, because that is another very deep rabbit hole that I think you probably just want to watch the live streams for, or watch them on 5x to try to get.
Oh, wait, so literally live streams? What was he live streaming?
Meow's live streams are crazy. Yeah.
Okay. What does he live stream?
So no, I mean he's not a streamer, but leading up to the event, he basically just said fuck it, I'm gonna go live and just talk through the whole LBP process. I was one of the few hundred people watching it, so I guess I understood it pretty well.
I see.
But yeah, I mean,
is he doxxed or no?
No, he's a public guy. Yeah, he's completely doxxed. I mean, I think he actually explained it pretty fairly. It's just if you didn't really read or watch these hours of content, maybe you would have missed the fact that they were going to withdraw the LP or something.
Yeah, all of this suggests that someone needs to train a Solana to ETH person language model to convert all this Solana content to ETH people language, like translator.
Right. Tom, what's your take on this?
I mean, I don't know. I think there's maybe the component around transparency. The other point too is people just got airdropped tens of millions of dollars, and they're upset that the team is providing liquidity and maybe also taking some liquidity for themselves that they're not having raising any money. Like, I feel like no matter what you do with airdrops, people are always going to be upset and they always want more, even though they're always getting free money. And so I think this kind of comes back to the point around like, you get this great sort of press moment out of it, but to an extent, there's always going to be people who are dissatisfied with some component of it.
Yeah, I think like the dissatisfaction usually comes if there's not like an immediate price pump on the first day, which a lot of like people who may have missed the airdrop, they're probably like betting that, oh, maybe it'll still go up. They're trying to trade the event. So I think like if the event is like a nothing burger or it just goes down, suddenly like all these people get mad. We've seen this like so many times. So I think, like for Jupiter especially, I feel like a lot of the price discovery actually happened in these like pre-markets, which maybe we'll speak about later. So like the actual day one launch was pretty boring. It was like not exciting at all.
It's a great transition to talk about Aevo, actually.
Yeah, so one of the interesting parts of the story was the price discovery that started taking place before Jupiter actually launched, because Aevo, which is the product that was launched by originally Ribbon Finance, Aevo actually listed a futures for Jupiter before it launched, and I think at the time the pricing on the futures was pretty in line with where the token originally came out. Talk us through how you think about launching derivatives of assets that don't yet exist. I remember back in the day, there were a few exchanges that started centralized exchanges that started doing this. Very interesting to see this happening in DeFi. I'd love to hear your thoughts and strategy.
You remember CoinFlex?
There was a few others. Yeah. There's some Chinese exchanges that also used to do that a lot. I'm curious. Yeah, talk us through it.
Some of them still do it today. I think KuCoin is one of the bigger ones. But I mean, they kind of rip users off with like the fees like 5% or 2% or something just for one trade. So it's really expensive. There's like physical delivery of coins. It's pretty sort of annoying to use, I think. And I think one of the ones that we got inspiration from was like the FTX Coinbase market, which was like, they actually listed a Coinbase perp before Coinbase IPO'd, which is like really interesting. And I think, liquidity was really bad. And like, I don't think any serious people are trading there, but it was still like an interesting market. It's more akin to, I would say, like a prediction market compared to like an actual like future. So the type of people who want to trade these things are more of like prediction market style speculators compared to like actual people who want to trade the stock. But yeah, I mean, we started working on this like maybe 6 months ago. I think the original idea was it came out of this like Binance launch pool. So Binance maybe 6 months ago announced they were going to launch Say, which was like a pretty anticipated coin. And like within our office, we were all just like guessing, oh, do we think Say is going to launch at $1 billion or like 2 billion? And we were just like making a market like just casually. I think like someone just had a crazy idea, like, oh, what if we just made a market on Aevo itself for this? Like instead of just like betting P2P, what if we could just list some sort of market? So yeah, we kind of just did that. And I think the core idea was like, what if people could trade this, and when the token actually launches, we actually input like an index price. So it'll start converging onto the actual price of the token because of the funding rate. So it kind of is like this future, but it doesn't deliver on the day itself. It kind of like gently transitions into like a regular perp through the funding rate when the actual token is launched. But before the token launches, there's this whole long period where people are just trading this weird thing, like no one actually knows what the price is. It's kind of completely dislocated from anything. So it becomes a very interesting thing to trade as well. So yeah, Jupiter was like obviously one of the most like anticipated launches in the last few months. We made a market for it in December, and we when we first started this market, it was only trading at $1 billion. And then over the month, like Solana and Jupiter got like super hyped. The market started trading all the way up to like 8 billion. And over the last week, it sort of like came down all the way to 0.4, or like 4 billion, and then it kind of settled at 6. So yeah, I think interestingly, a lot of people were trading this market. It was like our biggest pre-launch market by far. Quite a few mil of open interest. So I actually do think a lot of like price discovery happens on these things, interestingly. And like, I mean, one of the most interesting phenomenon that I've seen is there are all these YouTube videos and like tutorials on YouTube of like, how do I hedge my airdrop on Aevo? Because I mean, if you know that Jupiter is giving you like 200 tokens in a month, I can go to Aevo and just like sell it now and like lock in the price. So that has become like one of the interesting primary use cases of these markets. All these like industrial level airdrop farmers can kind of lock in a price. Yeah.
So actually, a very funny thing I've observed recently, and I won't name names, but I've heard some larger fund investors who have literally indexed how they were valuing a private company, like pre-token, based on the Aevo price. So they were like, here are the comps, Aevo prices of their pre-token launch, and so we're going to value this round of this pre-launch, earlier than that pre-launch token at some multiple times the Aevo price. So like, I feel like that is, if there's a sign of success, it's like private market investors.
That does make sense. Yeah.
Yeah. Like, would you rather
rational.
trust like $1 million in like actual secondary physically delivered SAFs, or would you rather trust like, 10 million open interest in Aevo?
I agree, but like, for instance, there's a lot of incentive for the team to go trade the comps and push the comps price up so that their valuation goes up, right? It's kind of the thing where, I mean, the private market investors have to be kind of a little bit cautious.
So prediction markets solve this. Prediction markets solve this on their own. But
sure,
it's interesting. I love this idea, Julian, that yeah. To be clear, yes, obviously, for relative to a team that wants to really push up their market comps, which it's funny to imagine that that's the reason why you're the perps on your.
I will say that this private investor didn't even think about this when I mentioned that. Oh, well, what if the team did this? They're like, wait a minute, I have to go back and look.
Right. I mean, to be clear, you could also do this on SAFs, right? Like if you want to go buy, a thinly traded SAF.
I think it's funny that someone was investing and didn't even like think that this would be an adverse selection type of thing against that. Sure.
So what's interesting, what I really like this idea of airdrop farmers hedging their price risk, right? And we should maybe talk a little bit about what this means, and this ties into one of the next things I want to discuss, which is points and airdrops generally, because it's been a big theme, especially of what's happening in Solana, given how many projects on Solana are courting users with airdrops or point systems. So an airdrop farmer, for those who are not familiar, airdrops are when a protocol basically rewards users of the protocol or people who are doing some kind of work for the protocol with tokens. And we've seen these things called airdrop farmers, which are basically people who are more or less gaming the system. They're kind of inorganically pretending to do things that users are supposed to be doing in order to try to make money from the protocol. That's kind of giving away these incentives to users. So if you sort of imagine the person who like creates multiple Uber accounts and refers their own accounts, that's the real world equivalent of what airdrop farmers are doing. But in crypto, nobody can tell you're a dog, as the old joke goes. And so it's not very easy to actually figure out who's a real user and who's kind of a quote unquote airdrop farmer, unless there are certain signatures that
look. By the way, the
apart.
Same thing is true for every e-commerce platform. There's tons of fake volume.
Of course, but people generally use they use like phone verification in order to duplicate people and stuff like that. But yes, there's fraud in every kind of referral scheme.
So yeah.
Oh, of course. I used to work in anti-fraud, so I know very well how many people try to game these systems, especially outside of the U.S., where like the relative incentive to game these referral systems is extremely high. So the interesting thing is that, okay, so there's these industrial airdrop farmers. We can't really call them hedge funds because I don't think you can do it at the scale of like tens of millions of dollars, but probably in single-digit millions you can make by doing this kind of industrial airdrop farming, quote unquote. The interesting thing is that there's another protocol called Pendle, which has also gotten a huge surge in popularity specifically because people who are farming points on Eigenlayer are using it to hedge their Eigenlayer points. So essentially, Pendle, my understanding is that allows you to take your future yield, package it up, and sell it to somebody else, which is essentially not just your future yield, but also your future airdrop on Eigenlayer. And so essentially, it's become like this pre-launch market for Eigenlayer and valuing your Eigenlayer points. And so the market is kind of finding all these weird little ways to be able to give financial products and like hedging products to these industrial airdrop farmers. And it's becoming quite a big business. So I find this fascinating, the way in which people are finding markets where they otherwise, like Pendle before Eigenlayer took off, or not took off, it started getting lots of TVL, let's say. Pendle was kind of floundering in terms of product demand, but they've kind of found their one thing that seems to really be working for the protocol. So I'm curious to get the perspective from you guys. So first up, the rise of points. We talked before about points. I think Tarun, you mentioned that points was the biggest innovation that you thought you've seen in, or the best new innovation for this year.
Let's just say it's the innovation that attracted people back.
Sure. It's worked incredibly well. And points are connected to airdrops, but they're not the same as airdrops, right? So let me ask you this: how would you define the difference between airdropping tokens, which was the meta for a very long time? Hayden, the founder of Uniswap, infamous for having done the sort of airdrop heard around the world, one of the biggest airdrops in history. He's been very critical of points. How would you describe the difference between airdrops and points, and how points are different from just pure vanilla airdrops?
So one very important difference is that airdrops generally have a fixed criteria that is verifiable on chain for when you can claim. So that basically means like, hey, did I use the product for a certain amount of time? I did some set of actions, and then based on those actions, the protocol codifies that in a smart contract, such as a Merkle distributor or different type of distributor to allow you to claim your tokens. Points, however, are sort of arbitrary insofar that as they're realistically at the discretion of the team. They're not actually converted to real tokens. There's like, oh, you do some actions, you get these points, and they may convert to tokens later, right? So the examples of those are Jupiter, Jito, etc. that had like a lot of these types of, and of course Eigenlayer being the biggest one now. I think the beauty of crypto is that there's this inevitable thing where there will be like the Aevo for points. There's already like Whales market, which lets you do P2P points trading. And like, obviously once there's enough liquidity in that, people will make a prediction like market, whether it's looks like Aevo, whether it's more like a prediction market for trading these types of things. The difference is that there's still some discretion in how the points turn into tokens on the team. And so that's the place that I think most of the criticism is that the teams are holding that. Now, I think there's a way to view this in the dialectic. There's like the positive, right? Which is like the point systems allow developers of protocols to see which actions people are doing. And then over time, sort of almost like a A/B test experiment, kind of get users to do actions that are more beneficial to the protocol's long-term health than just like add liquidity, get tokens, remove liquidity, right? Like that was sort of the old game that existed. So it actually allows for basically, and in my mind, the best case scenario is protocol developers get to use their users as QA testers, and points are a way of like really fleshing that out. That's the best case scenario. The worst case scenario is that the team just kind of rugs the users or changes their criteria, and then the users are like, "What the fuck? Like, we committed our capital and we didn't." So I think the key thing is like, a little bit like what happens in e-commerce marketplace optimization. You kind of have to like kind of gently do this type of these changes. You can't like do them very abruptly because like obviously that will lose user trust. But I do think there's sort of like, having the right types of commitments from these teams is like quite important. I just generally think, though, the beauty of permissionless finance is that someone will make the prediction market, and all of a sudden your points thing won't be this like thing that's in the control of the team anymore.
Yeah, I kind of when we talk about like futures and hedging, I'm always reminded of there's kind of a famous story of how like Ray Dalio helped McDonald's hedge like corn and soy futures to be able to create chicken nuggets. And so I'm kind of like, this feels kind of like the chicken nuggets of, I guess, like crypto futures, and that like they allow sort of industrial air farming or airdrop farming and like points farming to exist, and that people can now maybe effectively hedge or calculate the rewards without having to like be subject to this volatility. But I don't know if that's really kind of the outcome or the good thing that we want. Like chicken nuggets are great. I don't know if like airdrop farming is actually good for users or protocols or the ecosystem in general.
You could argue both are equally bad for your health.
You could.
One involves you
So,
sitting
Julian,
and clicking all day in front of a computer, and the other one is, well, the McDonald's chicken nugget, which is famously bad.
I mean, I assume a lot of it is automated if you're doing this at scale, but yes, I'm sure there's also
Sure,
lots of
but like
sitting
you
at
have
your
to
desk.
actually you have to keep reprogramming when they change the rules on the points, right? It's not like it's
Sure, yeah. You have to keep watching these live streams apparently, so yeah, there's a lot of pieces to it. Yeah. So Julian, you guys have intentionally not done a point system in Aevo. And so you guys originally Ribbon Finance, you're launching a new product called Aevo, you're rebranding the token. Talk us through, like, why did you decide to do that? Points seem to be the meta. Why are you guys not doing the meta?
Yeah, so I mean, I agree a lot with what Tarun just said. Like, I mean, there's like a positive and negative in terms of like the positive, the team gets to iterate on how the rewards are given out. Some ambiguity is sort of left on the table so that the team can still change things. If like some sort of user behavior is really getting skewed because the criteria is not set up in the right place, team can sort of shift it over time. But I do think in the last few months, maybe the pendulum has swung in the other direction, where teams obviously know that currently airdrops are kind of this hot meta, and anyone who announces an airdrop will sort of attract a bunch of people. And I think the pernicious part about points is they can sort of just dangle this criteria in front of you and decide to just not give you anything, because ultimately they control like what the conversion of points to tokens are. That's sort of like the weapon that they have. So yeah, I think currently in the points meta, everyone's like trying to do this calculate like this. The meta game is really just like, okay, I know how many points I'm going to get, but the second game that they're playing is how many points do we think is going to convert to tokens. So they're really two sides of that game. And I think like one phrase that I've been seeing on Twitter recently is like the farmers are getting farmed. So teams are sort of attracting all this TVL, like all this, but by dangling some point reward. But eventually they just decide to give the farmers nothing. So I think that sort of creates a very bad taste in people's mouth. I mean, I think it's just very tempting, right? Like if you have the ability to. You already have the TVL. You don't need to give the tokens at that point. So it is very tempting for the team. But yeah, I do think the pendulum is starting to shift away from it. I think people are like this 2-level game also creates a lot of mental like fatigue in terms of like you need to think about how I'm actually farming the airdrop, which is like how I'm getting points, and like you need to sort of try and reason about whether the team's gonna give you some amount of tokens. So yeah, I think we just feel like, the classic airdrop liquidity mining style thing actually works pretty well. Like the criteria is clear up front on how you're getting these tokens. You're getting X amount of tokens, you can value it. And I mean, with the rise of all these like financialization of points, it's kind of the same thing anyway. Like if it's going to be the same thing, why go through all these hoops? So yeah, I think like something simple actually feels better and works better for everyone. So I think we're just going to do that instead.
On the other hand, I will say one thing is there is an analog of these point systems in normal finance that's not, like credit card points or something, but that is the pre-IPO equity sales where, right before a company IPOs, oftentimes what they'll do is they'll sell in advance at a discount or, undetermined floating discount sometimes. Some fraction of their stock prior to IPO, so that they have some like guaranteed liquidity on day one. And usually those people are kind of like holding for a year, and they have some kind of discount rights. And like if the IPO doesn't happen, then like they get paid back in some way, partially. And in some ways, these point systems feel like almost more algorithmic version of the like pre-IPO to IPO conversion market. And I just think because crypto is crazy, you have all these like amazing prediction markets that show up like almost instantly for like how much an eigenvalue point is worth. Actually, the eigenvalue point market is one of the funnier point markets that you can see. Like the spread in people's pricing is insane. It's like it truly is like amazing to look at like how like a market can start with so much uncertainty and then like over time like kind of converge. It's like such a beautiful like thing to watch.
It's funny. The other analog, I guess, when I think about the pre-IPO market is that there's also this like weird pricing game where like you actually like don't want to hit the exact market clearing price when you're pricing your company. Like you want a small pop on IPO day, which is kind of like the same as like token launch, which actually means you like left value on the table, but it sort of makes everybody feel good to like see the number go up, even though it means you sold for, under market and was probably not the right decision. So it's like, airdrop farmers also want to see the token go up, even though, maybe they're selling into it or maybe, the team is leaving money on the table.
Yeah, it's funny. I tend to think that despite the points that you made, Julian, I tend to think that points are, you made the point that they're less transparent. I think that is in some ways to the benefit of the protocol, because once things are completely transparent, then it is a pure financial calculation. And there's clearly something about people that the Jupiter airdrop, the Jupiter team is going to continue to do points, and they're going to continue to basically create more and more incentives and airdrop more tokens over time. But somehow I think we all know that nobody's ever going to care nearly as much as they will about this initial airdrop. Not just because of the scale, like maybe they'll do one that's even bigger scale, possibly, one can imagine that, but people aren't going to care to anywhere near the same extent. The spotlight effect is going to be much less because of the fact that there's so much uncertainty about what the initial airdrop is going to look like and feel like and what the story is going to be. And the same thing is true for almost all of the liquidity mining programs that have been done by, even if you think of DeFi V1 protocols that initially did liquidity mining or are continuing to experiment with liquidity mining. The big stories was the first time they did it and what the token came out at and how it floated and blah, blah, blah. And that's when like the TVL was, you saw the most craziness. And so there is something about the uncertainty and just like the really, really, the massive volatility that attracts people, creates storylines, gets people's imaginations really going. And then once it's okay, well, here's how much the comp emissions are, and here's how it changes your da-da-da, and you just kind of do the math on a spreadsheet, and you decide how much liquidity to add based on this incentive. It does lose some of that magic that I think points hold on to for quite a bit longer. Now, maybe it's just a function of the token floating the first time, and the second time you do it, second points program, nobody cares.
Haseeb, are you telling us that you really need to go like to an amusement park and go on a roller coaster and just get a thrill again? Because like that's what you're saying. You're like you want the thrill.
That's what I'm saying.
Thrill back. Yeah, you want the thrill back.
I'm not an airdrop farmer, so I'm not talking about myself. I'm talking about it is very clear the level of engagement when you make people not know. I mean, it's like why do people enjoy? I don't know, like a pretty bad example. I knew a lot of guys when I was a professional poker player who were low stakes grinders, right? And they would play poker and they would grind out making like $10 an hour or $15 an hour, but they would hate working at McDonald's. And McDonald's, I don't know, like some jobs at McDonald's actually pay more than that. But there's something about like the uncertainty and the risk and whatever. It's like, oh my God, I'm making my money doing this cool thing. That really captivates people. But if you make it very clear to them, here's how much money you're making per hour, and it's exactly this every single hour, and there's no uncertainty and there's no risk, people are like, I don't know, it's not as fun to do that as to bound myself up with the uncertainty. Even if sometimes I get rugged, people seem to enjoy it more. I think it's just part of human nature.
What if, like I told you that like the trend of people feeling like they get rugged keeps increasing over time? And I think that is going to happen, and there's going to be a new disappointment every single month. And I think that will kind of change the meta again. So I just feel like if at some point, maybe I'm a bit early on this, but if you say you're launching a points program, it's kind of the same thing as like saying, yeah, we're just gonna like screw you over later. So I do agree with your point, but I do think that like there's gonna be like a strong trend towards these things disappointing to the downside for most users, and that would basically kind of kill the airdrop. Maybe that's like for the better actually.
I mean, I thought this was going to happen years ago, but it hasn't happened. Like the points are very strange because it should be a gigantic prisoner's dilemma, which is that you let everybody else create this norm that you launch points, and then when the points system is finally done, you get this big juicy airdrop and you make everyone happy. And you would think that everybody's individual incentive is to defect and basically hype people up and make them think they're going to do this massive airdrop and then do a tiny little nothing airdrop, but get all the usage anyway, get all the TVL, get all the trading volume anyway, because you're sort of retroactively rewarding people, which shouldn't work. From a game theory perspective, that should not work. That should be just an unsustainable equilibrium. And it's been like years now, and it just keeps working because people are afraid of getting yelled at on Twitter. And like when you see people defect and they don't do the thing, they don't give a juicy enough airdrop, people on Twitter yell at them for about 10 minutes and the team immediately folds. They're just immediately like, oh my God, I'm so sorry. We clearly miscalibrated. We're going to go back to the drawing board. Our sincere apologies. We didn't realize how much the community has given us. And they go back and they revise the airdrop and they do a bigger one. Every fucking time this happens. And it amazes me because of course these airdrop farmers are overwhelmingly not their actual users. These are mostly non-sticky users who don't really care about their products, and they leave as soon as they get their airdrop.
Yeah, I was going to say, like, the people who are disappointed are like the people you don't want, right? It's like the, in traditional Web 2 where like the more incentives and the more, affiliates and the more referrals you give out, like the less sticky, the less these people spend, like the worse these users are. And so it's really hard to replicate organic users who find your product organically or through word of mouth, and they just love it and they're sticky. And so it feels like that was sort of the initial idea of liquidity mining. It's this small subsidy to kind of get people in the door, and instead it just turned into like, we're just going to attract all these basically toxic users who are sort of net negative for the product or aren't actually going to retain, and pay them, and then they're going to leave as soon as they're not getting paid enough. And it's like, these are people you didn't even want in the first place, unless they're contributing some sort of massive value to the ecosystem, which doesn't really seem like they are.
Well, the counter argument many people make is that, well, airdrops are not really about users or retention or whatever. They're really about distribution of the token. And so you're just finding a way to decentralize the token, and whatever, these assholes are good at, they're just as good as anyone else.
Yeah. I give a talk on sort of airdrop stuff at this Aptos Summit recently, and I brought in this research from Jack Hawthorne, I think, who works at Variant. It was one of the interesting bits was, obviously there's this analysis of people who received airdrops from Uniswap and 1inch and things like that, and what they do. By and large, like a year in, like 95% of them had already sold the token. Not super surprising. The interesting part was people who bought the tokens from those airdrop sellers were more engaged in governance. They held the token longer, like because they were actually putting their own capital and time into the token. They were therefore more engaged and more invested in it. And so, yeah, maybe it distributes it to a larger number of addresses, but these are not necessarily the addresses that are going to be your core user base and your core fan base.
Like to your point, it also does seem like the ICOs are making a bit of a comeback again. I don't know if you have seen, but there are these new like protocols launching. There's one that launched yesterday, which got a lot of hype. But basically, their whole like branding and tagline is about like making ICOs great again. So I do think there's some like nostalgia, or maybe I don't know. We're just like running back 2017 like concepts again. But yeah, maybe this Jupiter thing where effectively they did do a big public sale of the token through this liquid LBP thing. But yeah, maybe there's like going to be a sort of revenge of the ICO this cycle. I don't know. It seems it's like,
is Meow American?
Again. He's no, he's based in Singapore as well.
Singaporean, I see.
So actually, I actually am like I said, I think there's ways to use point systems kind of positively to like stress test things, especially if it's like to stress test how people will use stuff. So I think the eigenlayer point system stuff is actually the most interesting experiment to me, because all of these liquid restaking protocols, which are technically adding a lot of risk in some ways, because a lot of them are levered via things like Pendle, and they're levered in weird ways. So that's right now you don't necessarily see that risk because things are trading at par. There's not like some kind of deviation, like they're not supposed to be pegged assets, but they trade in some range, and so that's why these things seem to be somewhat stable. But I think the interesting thing, right, is like this is actually before there's a lot of AVSs. You're actually stress testing the stuff that people are building on top, and what they're doing is they're adding their own point system, and so now you're getting these like not so great users from a revenue retention or stickiness perspective to basically QA whether something will blow up for you before you're live. And I actually think that's a very interesting use case of this type of stuff. Now, as I said, you can tell from the points market pricing, like no one agrees on what the value of an eigenlayer point is right now. It's like the variance is insane. And so I think that in and of itself means you get more like reps of like, QAing is the wrong, it's sort of like, it's like somewhere in between stress testing and QAing. And like, I actually think there's some protocols that are new technology where that's actually a huge positive versus like finding out when your token's live.
I guess I don't understand for eigenlayer in particular how it's QAing and not just making it a bigger honeypot. Because what is there to QA right now?
Well, I mean the how stable these LRTs are, right? Like, do they have this huge aggregation effect, or will they compete with each other so that you relatively?
Oh, I see, but that's like downstream of that. But that's
right.
That's
but that impacts the security. That impacts the security of the. Yeah, but it impacts the security of that, right? So it's actually a way of like seeing what happens with things that aren't in your control, right? Protocols built on top of you are driving volume, and like you're able to see like this kind of like interaction effect that you might not have predicted when you're trying to build your new thing. So I think like there's a world in which that type of stuff it's like incentivized QA testing. It's like better than it's like somewhere in between incentivized testnet and like a live product.
You're getting baited, but you're getting paid to be baited, and so it all works out.
I'm sure this is like getting catfish, but like then turning out to like the person.
Have you guys
you become friends.
What?
I don't know. I'm trying to find some analogy, but I don't have.
That sounds like a great romantic comedy.
I don't know if you guys have seen for some of these like social based points system like Frontech, there's this whole rise of like this 3-3 thing. Have you guys seen that? I think that's like one of the most interesting phenomenon.
What is this?
So basically, Frontech and maybe Blast and a few other protocols, they give you extra points if you refer other people. So there's this like virality component to it, like how many people can you bring in gives you some sort of multiplier. So there are these like informal groups of people, like they're not even DAOs, they're just like Twitter people. And basically they just make an upfront commitment saying, if you use my ref link, I'm going to give you back like 50% later. Like I'm going to give the bonus that I got from the protocol to just like send it back to your wallet. And there are all these like accounts now, which are just like 0xCBB or whatever is one of the most famous ones. Basically, he has like an extremely massive like Blast group of people using his ref link because he has made this commitment to give it all back, or to give half of it back. So yeah, it's like a very interesting coordination between people. I think maybe at some point someone's gonna like codify this into a protocol or some sort of like smart contract way of distributing the points. But yeah, it is very interesting to see how.
Well, but okay, so this is one of the advantages of points, though, is that points are revocable, right? It's not a hard commitment in a way that, like, you're talking about how the nice thing about airdrops is that they're totally transparent, the rules are set up in advance. The whole point about points is that it's like, well, the team has the discretion to say, like, wait, hold on, no, this is not okay. You're gaming this, and this is not in the spirit of competition. And so, I don't know the particular person you mentioned, but I can imagine Blast, when they actually are ready to convert the points into the tokens, they're like, wait, actually, looks like this guy and these guys over here, like what they're doing is bullshit, and so fuck all of you and fuck all your points. And even people who are trading on whatever that whale market is, sort of doing this is whale market, yeah. So this place where people are trading points, you can imagine that a bunch of point systems just go through whale market. Is it open? Can you see all the people who are trading?
You can see all the bids. It's just peer to peer. It's just
you can see all the bids. Yeah, if it's peer to peer, you can imagine people just going in there and saying, "Look, we're going to go back through the history of everyone who's traded on this marketplace and invalidate everyone. All your points go to zero." And all of a sudden, people will feel this real fear that oh shit, I better not try to financialize my points because if I get caught doing it, they go away, and that becomes a big risk.
Yeah, but I feel like this cat and mouse game sounds actually quite entertaining, right? Between the team and the, it's just now it's in another level of game theory between them.
Yes, totally. But that's also true for airdrops, right? Back in the day when people were doing just vanilla airdrops, they would spend a lot of energy trying to filter out, the airdrop farmers and the inorganic activity and this and that. And so this has always happened. At least with point systems, it's more transparent that is in the purview of the team to go in and do the work to figure out, who's doing this honestly and who's kind of fucking around.
At the same time, I do kind of agree with Julian. I kind of think there's going to be two market forces that kind of cause these things to change again. One is people being like, I can't get out of these and I need liquidity. Fine. But the second is sort of this aspect of if these financial markets start becoming sufficiently liquid and then the team is like, hey, we're going to ban you from using it. It could go, there are two ways this could go. This could go okay, people are afraid they won't sell, or that market will suddenly be more liquid because everyone's like, oh, my liquidity is worthless in this protocol anyway, so I'm just going to exit, right? And so there's so many different end states from this that would be. You
mean take your liquidity out of the protocol, or do you mean exit your points?
Well, exit your points because you're assuming that your tokens are going to be worthless, and so that kind of causes this no one adding new liquidity, right? It actually will flatline the point system. So there's this interaction
because it's less liquid, the points are less valuable in and of themselves.
Yeah, and also if the team says, oh yeah, we're not going to give you an airdrop, then now most of the market you might just say no new entrants join your protocol. So there's this kind of trade-off that happens, and I think that will be this tit for tat type of thing where one side does one thing, the other side makes another market, and that's the beauty of these permissionless markets, right? You can't really stop anyone from doing that. It's not like TradFi where Gary Gensler can beat you on the head with a bonk mallet.
He still can.
Yeah. I don't know what our point security is. I don't know. That one is too hard. Good luck.
Points are just points.
Yeah, points are just points.
I think everyone needs to go back and take Beanie Babies. Everyone needs to go back and take a Web 2 growth marketing course because I feel all this stuff has been so well trodden. Even the referral thing that you're mentioning earlier, there's this kind of famous story of in the early days of Uber, the software engineer figured out that you can get a lower. I think Uber is giving out $20 to everybody that you could refer, and so the software engineer figured out that you could run Google search words ads for less than that $20 CAC. He was paying $2 for running Uber referral code or something ads on that search term on Google, and so he's just racking up tens of thousands of dollars in Uber credits by running Google ads for his own Uber referral link, and eventually Uber found out and they shut down his account or removed his credits or something. But it's all the humans are humans and they just respond to incentives, and a lot of this stuff has been tried many, many times over. And so I think if we maybe learn more from kind of the past attempts at doing this, we'd have actually better systems versus kind of reinventing.
This is why I brought up the marketplace optimization, A/B testing stuff, right? That's how people catch, or at least do these experiments to catch people, right? And I think that the teams doing points are kind of, it's not like they're not. They know they need to do that. So I think it's just more the quick financialization changes this in the sense that your A/B test can be interacted with in a way that you can't control. So that's a novel thing that's very crypto only. like this whales market, points market interacting with like how people are using your protocol is like, that's a totally weird thing. Or like Aevo interacting with how VCs are pricing deals. That's also a new thing, right? You know, do you remember in like the early, maybe like 2013, 2015, there were like tons of VCs would just be like, give me your DAUs and MAUs and like retention, and like, okay, I'm
Like
I'm
social
valuing
capital.
your company from that. Right? Like this is like that, except it's like people are putting more skin in the game.
Yes. I mean, so Tarun, are you arguing that a team should not be actively kind of policing and deleting points and trying to enforce the non-transferability of points?
I just think like it's going to be I think initially if they do it, people might get scared, but then people will start finding ways around it. Like don't underestimate the creativity of people who want liquidity.
Of course, but I mean, Tom just brought up the point of like, okay, Uber and their referral codes, right? Like, okay, if you're Uber,
Uber can actually shut you out of the system.
It's all in the game, technically. Well,
Uber can shut you out.
So can a point system.
No, I can go sell on whales market whenever. Like
Yeah,
my point is there'll be a new financial product that comes out to let you get out. Which Uber, you're locked in.
I think for whales market,
right? But you can collapse the value of the secondary market.
Yeah, no, you definitely can collapse it by like doing these rules. But I do agree that with Tarun's point, it's just like we literally have this like permissionless trading of these things, and no one can stop it because it's all traded in dollars. It's not traded in the tokens or points. Like it's literally a completely separate thing, and it's like enforceable with like contracts, smart contracts. So it is like a very crypto native thing. That you can, for sure that this protocol is going to be able to deliver the collateral if the points are worth nothing or something like that, which I think is like, is quite novel actually.
Wait, so the points are generally tied to the address, are they not? Or are they tied to something else that's transferable?
They are tied to the address.
So you're selling like an address.
In whales market, you're not selling anything. It's really just like a future that we both agree on. So if you are the seller of these points, I just post USDC as collateral.
Oh, I see. I'm not actually selling.
Yeah, it's like a CFD.
Yeah, exactly.
I see.
That's
Yeah,
what I'm saying.
Got it. So you couldn't necessarily identify where the points that are being speculated on are originating from.
You can't really stop it.
Yeah,
I see. I see. Well, you can't like if somebody creates a new account that is not the account that actually has the points they're hedging, then you can't necessarily tell who's doing what.
Also, if there's enough demand. If there's enough demand, people will make pooled models. The pooled models become much harder to police. It's like the cat and mouse game keeps going on. So like I think that's where it's extremely different than Web 2. And that's also something where it's like purely the on-chain stuff will dominate the centralized. Because the centralized things will look like Uber and they can shut you down, right? They can just turn off that market. But clearly you can't really shut off these on-chain markets for this stuff. And that's where the fun is. That's like the like excitement.
Yeah, that makes sense. For some reason, I was under the impression they were selling accounts, but if they're just doing derivatives, then there's no way to stop that.
Yeah, I mean, you could sell forwards, off-chain, super, analog, right? The same kind of thing. I think you really you need a point system for the point system so people can hedge their points exposure.
But I think we're already starting to see that. No, there's already people starting doing that. So my point is,
wait, what?
There are already people who are making like a point derivatives.
Okay, sure.
So like you I think that the beauty of this space compared to everything else is this freedom means people will find a way to be creative because they want liquidity.
Yeah, no, that is certainly true. Very interesting. Well, so we're coming up on time, so I wanted to wrap, Julian, with sharing a little bit about, because right now you guys are going through a big transition of your own. Originally, as I mentioned, you were Ribbon Finance. I think the token is still called Ribbon Finance, but you are alongside Aevo, which is this decentralized perpetual swaps protocol. You're also rebranding the token without points, as we established. Talk us through like why you guys are doing that. There haven't been a lot of rebrands in crypto, or certainly not in DeFi. Why are you guys rebranding the token, and what is that experience like for you guys? Because that sounds, some people have done this thing where they launch a new token and it's totally new token supply. You guys are not doing that. You're moving everything over. Why? And actually, this is something we were just having a conversation internally because there's another team we're talking to right now that is launching a second token with a new product instead of moving over the original token. Talk us through how you're thinking about that.
Yeah, I think ultimately, teams have the choice to do a new token. I think we also maybe thought about it, but ultimately, I think we just felt like
thought about it.
Yeah, I mean, like the product, we basically were going to collapse like the old product into the new product, and it wasn't going to be this separate thing. And I think where it makes the most sense to do a new token is when, maybe you're doing just like a hard pivot, like you're doing DeFi and now you're doing NFTs, and these are like completely separate things. You feel like they have almost no reason to be tied together on like an economic standpoint. Maybe it makes sense, but I think for us it was like pretty close, and the products were going to get collapsed. I think one main issue with doing a new token is sort of like the old token basically becomes worthless or becomes worth very little because it's now sort of governing a very small part of what you're doing. Probably the team has probably abandoned the first product. So yeah, I think we didn't want to have that mental sort of decision of like, should I buy this or that if I want to get exposure to what I'm working on. So we just decided like we quite like this single token model. But like I think as like someone who's been in this space for a few years, I think I know like new tokens are always like a new sort of story. I think people can build new hype around it. I think there are all these advantages to launching new token. So I think we kind of did both at the same time. So it's more just like a rebrand, but there's a bunch of like rules to how the token swap is going to happen. And yeah, I think like interestingly, almost all our users now like don't even know what Ribbon is. Like all these people in Discord, like I've never heard of Ribbon. Why are people saying it's related to this? Like no one even knows anything about the old product, which I think is like really healthy. So I think for those users, like they perceive this as like a new project, they're excited about it. But we also get sort of the old community who, they've been like hardcore like DeFi / option traders since like 3 years ago, and they're still sort of along for the ride and still within the community. So yeah, I think that's sort of like our thought process. We just get on all these new people, all this new attention, but we also sort of retain the old group. I actually do think we're going to see a lot more rebrands this year. Like Matic did one recently. Beam, Merit Circle did one recently. So yeah, maybe there's going to be this like bullish rebrand like trend that may happen, but we'll see.
Yeah. There's also BitDAO to Mantle. It does seem it's been actually it's been rebrand season. I guess just in time for a new bull market.
You can't forget the OG, ETHLend to Aave.
I mean, that was the most successful one. That was the most successful one.
That's right.
Definitely,
definitely true. Definitely true. Well, until Aevo,
but they changed the supply though, right? They changed, which that part is the part where I actually feel like is kind of interesting because like even in normal stocks, people do that for like meme reasons or to like make it more retail friendly, like the Tesla stock split. Do you remember where they like changed it? Like
Polkadot did that.
Polkadot, I don't remember when was that.
Yeah, Polkadot did that. They had like the unit price is very high, and they like did I don't know, like 100 for one or 1,000 for one.
Yeah,
token split.
I mean, the rebrand's a good time to do that, is what I mean. Like when
yes, totally agreed.
But you chose not to do that, Julian, right? So.
Yeah, I think
you decided to go 1 for 1.
1 for 1, like the denomination was small enough. We didn't need to add a few more zeros.
I do think it can be helpful to markets just to like kind of, people who are sort of thinking like, oh, this thing trades from here to here, and you like do some weird conversion to like divide it by 3.7, and then it's like, okay, you can't really do the math anymore. It's like, well, who knows what this thing is worth? That does seem to work at least to some extent, but I want to ask you this before we close out because we're up on time, but. You're Julian. At this point, you are one of the DeFi OGs. You've been doing this for quite a while. Who do you look up to as kind of your personal heroes within crypto or DeFi, or like who do you think has done it best, or you want to emulate?
Maybe this is going to be an unpopular opinion, but like I actually really like the way that Jupiter founder did what they've been doing for the last few years. I mean, Like it's really impressive.
Okay,
I mean,
Jupiter.
yeah, like I mean, I know the guy pretty well. Like he's great, and like they really stuck it out. I think like we spoke like almost 2 years ago at like the absolute bottom of Solana, and we were just like brainstorming ideas on rebranding. They effectively did a rebrand as well, from like their previous swap protocol to this. So we have had a lot of back and forth around like how to do this. And I mean, I think I really respect how they kind of stuck through the Solana plan the whole time. Like zero plans to do. They didn't get carried away by like the cross chain narrative or layer 2 narrative. They were just like day one. From
They didn't go. They didn't move to a move chain.
Exactly. I mean, all these Solana protocols like moved to Sui and whatever, right? But these guys really stuck it out. And like throughout the bear market, he was telling me that they had, there are days where they had like 0 users, like basically almost zero activity. But their products, like they had so much time to just iterate on the product. I think if you guys have tried it, I actually think it's like a really good product as well. They've just told me like they've done everything from
arguably best consumer product in crypto. I feel like
exactly, like they just care about small stuff like how quickly does the page load, like how quickly does your token list like auto populate, and as well as some like other sort of unique DCA features and stuff like that. So I actually think they did really well for themselves and like the Solana community. So yeah, I feel like I really respect that they really stuck to the mission. They never like pivoted or cared about whatever people thought. I guess that's just like in their personality as well. As he's a bit eccentric, I guess, doing all this like crazy meme coin stuff. He just doesn't care. So I actually really respect that, which may not be like a popular thing, but yeah, he's great.
No, that's a great answer, and clearly he's been very handsomely rewarded for that.
Yeah.
So, well done to Meow. All right, well, we're up on time. Thanks, Julian, for joining us and sharing your insights, and we'll be back next week. And hopefully my throat will be better.
Cool.
Hey, everybody.
Thank you.